Now, the big question heading into the Federal Reserve meeting on Wednesday is as follows. Is the Federal Reserve going to push back against the recent stir market pricing? You can see that stir market pricing, short-term interest rate markets, see over 5 interest rate cuts this year. So with the Fed expected to remain on hold, will they push back against that pricing? And if they do, will Powell signal a March rate cut? Thirdly, will the prospect of rising real interest rates mean cuts are inevitable from the Federal Reserve? So if inflation does keep falling but interest rates remain the same, that means real interest rates will end up surging higher, and that itself could be a reason for the Fed to need to cut rates heading into the back half of 2024. There's so many uncertainties. So with so many uncertainties, it can be very helpful to see the reaction of the S&P 500 over the last 5 years out of Fed meetings. You can see here, this is the event feature for Seasonax, and it shows you how the S&P 500 has reacted on the day after the Federal Reserve meeting. So you can see here that there is a bias for selling, and particularly if you look, say, at the December meeting that we had. Notice that the December meeting gained 0.26%, which made sense as the Fed took a more dovish stance. But notice that it ended on the maximum of the day. And similarly, the day before, it ended on the maximum of the day. And the day before that, it ended on the maximum of the day. So it's just quite interesting to see that the S&P 500 often closes on the maximum high for the day. And also, it's interesting to note that sometimes when the market does react strongly to a hawkish Fed decision, you can see some pretty decent falls. Look, 2%, over 2%, over 2%, nearly 6% here. So it can help to frame expectations when we look at the maximum rise and the maximum drop on that second Fed day. So the major trade risk here, of course, is that the Fed signal aggressive rate cuts, even more aggressive than stir market pricing. Though it's highly unlikely, of course, it could most likely send the S&P 500 higher and would be a major trade risk for this outlook. Remember, don't just trade it, Seasonax it.